Well, hello again, Maverick traders, and welcome out to your daily currency recap. This is Sankit here, and let's break down today's market price action. It's a Tuesday, March the 19th. Really busy week. Let's break it down one by one. As always, we're going to start with our top-down analysis, take a look at broader markets, then break it down into our currency baskets, and then talk about some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at our market analysis, let's just jump right into the numbers and take a look at news of the day. So let's just start with the broader markets. The equity markets, again, consolidating overall remains strong. We've seen some couple of days of pullback, but again, the market still seems to be resilient here. So we'll find out what happens tomorrow as we get the FOMC. We also had an interesting move last night from Japan. They raised interest rate for the first time since 2007. So again, something that market were already anticipating and they already priced that in. We'll talk more about it as we get into the charts. But again, something historic that we haven't really seen that they did for such a long time. So the end of that the negative interest rate era for Japan here. So if we take a look at the percentage change, you can see that today the biggest move was in the Japanese yen. So again, as we always talk about, buy the rumor, sell the news. That's exactly what we got. We had a nice little build up in Japanese yen for the last two weeks or week. And then again, we're seeing that roll over right on the news. So what's going to happen from here on? We'll have to yet find out. But again, today's price action was just a typical buy the rumor, sell the news. Outside of that, again, nothing really has changed in the markets. Strong remains strong. This is exactly what we discussed in the currency room on Friday. And that's exactly what we're seeing. The Kiwi remains the weaker one. Aussie mostly flat to slightly weak, and CAD is right in the middle there. Overall, this is a very similar to what we saw on Friday. So we'll find out what happened tomorrow with the FOMC ahead. We can continue adding on to the gains, or we can see a bit of a switch here. So we'll talk about that when we look into the charts. We are seeing other movements here. Again, big movement is in the crypto markets. Down 6.75%. Again, we're seeing crypto take this big move to the upside, but then also we get this big drawdowns here as well. And that the drawdowns are continuing in the crypto market. So definitely need to be cautious here. Now, outside of that, you can see the S&P was up 0.55%. So just gaining ground from what we lost yesterday. World Stock Index were up as well, but again, a small move in the gold and small move in the oil. So it wasn't really a big moving day in the broader markets. And that's typical expected when we are expecting some big news on the horizon, which is again with the FOMC tomorrow. So I'm not surprised with a little bit of a back and forth in the markets. Now you can see in the cryptos here, again, nothing is really safe here. Bitcoin is down 5.78, Bitcoin Cash 7.3, Litecoin, Ethereum, they both are 7% down. So overall, we're just seeing a broader sell-off in the markets in the crypto. We'll take a look at the charts and see, is this a buying opportunity? Or is this something to be concerned about? Now, let's talk about markets. Now, our outlook hasn't really changed. I mean, we're still at a +2 to +3. Again, take a look at it. We still have this nice little rally that started back in November, which continue on. So we are back at the resistance level. So we are not broken out yet. We are the same way in the broader markets, same way in the bond markets. We are not broken out yet, but so far, the chart is still look resilient. So nothing really has changed. Now, taking a look at the schedule, here's a couple of things to take a look at. So, Bank of Japan meeting last night again, 0.1% versus the negative 0.1%. So, no more of that negative policy. So, with this shift, we'll find out how this, Bank of Japan and the Japanese yen, move in the coming weeks. Now, looking at the numbers out of Canada, again, I was expecting a little bit stronger number. Take a look at it. That number was below expectations. So the Canadian dollar did fall in the news, recover towards the end, but overall hasn't really gone or broken out. So we'll find out about what the CAD's going to do here. But again, the inflation number is back-to-back lower, which again will keep the Bank of Canada more on the sidelines or maybe talk about potential cuts. Remember, out of the US, we're seeing increased numbers, but we're not seeing increased numbers out of Canada. So interesting divergence there. So tomorrow, all eyes is going to be on the FOMC. Outside the FOMC, we do have a couple more announcements. We have the Kiwi GDP, and we have the Aussie employment report. But the biggest one is going to be the FOMC. That's about 2 p.m. Eastern time. Again, we'll be meeting live for this as well. And again, taking a look at it. I think most of the movement's going to come off this press conference. That's really where we see a lot of back and forth. Also, don't forget that early morning we had the pound CPI as well. And again, these CPI numbers, as always, moves the markets, moves some of the currencies. But my real focus tomorrow is going to be around the FOMC and perhaps look at something that I can hold into the Kiwi and the Aussie employment report. Let's take a look at our currency analysis and see how things are looking on the velocity score. And as you can see on the velocity score, we got -3 on all the cryptos and the Japanese yen. So it's a sharp sell-off over there. But outside of that, take a look at it. Kiwi remains weak. Aussie, more on the sideways. CAD and Swiss franc. Swiss franc had a bit of a +1, but that's a counter trend move. Overall, all the trends remains intact. Pound, euro, dollar, they're both on the strong side, and they remain strong. Kiwi remains weak. And Swiss franc, we've seen go back and forth. They flip-flop. Yesterday was a nice negative day, and today just carried or rallied a little bit. But remember, in a strong trending currency, these rallies could be short-lived, but we want to be trading where the trend is, which is towards the downside. And CAD right in the middle here is a bit of in a no man's land. It's not really breaking out. It's not really falling apart. So let's just keep them on sideline here. So based on that, let's take a look at some possible setups ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Looking at the possible setups ahead, let me just talk about the bond yields. So we are going to the FOMC tomorrow, and I want everyone to take a look at where the bond yields are. Bond yields are right at that resistance, so which means that if the FOMC comes out a little bit more hawkish, we see a breakout. And if we see a breakout in the bond yields, what's that's going to happen? That's going to take the dollar higher with it. So as you can see, the dollar is still hitting that resistance. Dollar's going to break out, and I think the market's likely to break lower off that news. So based on, again, looking at the odds and probabilities, I won't be surprised that the FOMC stays a little bit more hawkish because of the data that we're getting is a bit more on the higher inflation. If that's the case, I think dollar could break out. But I want to see a breakout, not just in the dollar, but in the bond yields and everything else. So keep an eye on those things. Now let's talk about the Japanese yen. So we had a massive drop in the Japanese yen here, but realized that it was just to buy the rumor, sell the news. We already had a nice little run up over here, and we see a big correction here. Another question is that, do I want to get short the yen here? And personally speaking, I like the candle to the short side. Everything's pointing lower. I don't want to get short until we can break the support. I want to find out if this is going to bounce off of it, or is this just going to continue moving lower. So I think we had a nice little move today. If you missed that move, you might just want to wait till tomorrow when we get the FOMC, and perhaps we can see something off of it. The interesting pair that's looking for the dollar yen is the one for tomorrow. Take a look at it. We are right up against that resistance. So if the yen stays weak and dollar stays strong, I think this can break out easily higher. It had a nice rally from 147 to 150. So there's a nice little overhead resistance all the way here. That's something we got to take an eye out on. But as always, when we go into news events, we always want to prepare for best and worst case scenario. So dollar Swiss franc remains on the list as a breakout trade. Take a look at that. Yesterday it did break out, and today just pulled back, but it's right at the support. which is the prior resistance. So we'll see where this goes. I like this consolidation pattern here. I want to look for a breakout off from this level. You can also take a look at dollar CAD, which again is just consolidating in this long range, 134 to 135. A break above 136 would be a nice little area, and this can easily run towards that 138. So dollar yen, dollar Swiss franc, dollar CAD looks good here, followed by the Kiwi dollar. Take a look at that. Beautiful setup. We consolidated for a long time and it's just holding here. So what we are seeing is just dollars in a holding pattern. We need to see a breakout on the currency basket, which means that all these breakouts will continue. At the same time, if the dollar weakens, we can see a little jump off of this as well. So we are really at that breaking point, and you just have to be careful tomorrow and look for that follow through. Aussie dollar, it's just right in the middle here. I don't love the Aussie dollar. If I have to short, I would like to be in the Kiwi dollar here. So a lot of the dollar classes, again, if I need to go long any dollar pair, which means that shorting the dollar, that's the worst case scenario for the dollar. I think the Euro USD can easily bounce off of it, and the Pound USD. Those are the only two that I like, as far as the shorting the dollar goes. So tomorrow we'll find out. We'll play based on that. But as we talk about trend, if you always want to trade with the trend is not really weak on the downside here. I think there's better chance for the dollar to break out versus break lower. But again, as always, with news events, it could be unpredictable. Now, with the Swiss franc, we can see what's going on. A lot of back and forth, but stays in that downtrend. So, ADI rally, want to be short on that one. There's no doubt about that. Euro Swiss franc remains a good candidate. Again, slow moving pair. This is something that would just hold on to. This is hitting that resistance here. But if it breaks out of a level above, it can really, this is what I'm looking for, is really testing the parity level, which again could happen in the next coming weeks. But this is a weekly chart. You can see that for 1, 2, 3, 4, 5, 6, 7. It's been in an incline for 7 weeks. So it's been continuing that strength there. So that's really what I have for you guys. Again, we can take a look at other things. Kiwi CAD was on my list, but really hasn't progressed, hasn't broken out. Aussie Kiwi is another one. So Aussie Kiwi is the one that I like here. Again, look at the weekly chart, 4 weeks of directly running up, and look at this daily chart. This is something we talk about, playing relative strength versus weakness. Despite of whatever is happening with the Aussie, again, if you just pair these two up, you're getting that divergence. And this is the currency that's diverging. Euro Swiss franc is a currency that's diverging. So these divergences that could play out nicely, consistently, but they're slower trades. So you want to play those in a higher time frame. Now, outside of that, if you have any news events on the horizon, like the dollar for tomorrow, that's something we want to be on the lookout for on the trade there. So that's the game plan for tomorrow. Again, all eyes will be on the FOMC statement tomorrow. Once that does settle, we'll have the Kiwi and the Aussie reports as well. We'll be meeting again live tomorrow for the FOMC, so come join. Hopefully, you can catch a good trade off of it. But outside of that, not to do much tonight. Want to be on the sideline and wait till tomorrow when this better opportunity arises. Till then, take care. Happy trading.